Liquidity in today's corporate bond market is evolving. Just like every other market, the electronification of the marketplace is changing the way brokers and dealers access liquidity on a daily basis. I'm joined with Michael Chuang from iTB to talk about how the daily change in liquidity is affecting the market. Michael, thanks for joining me. Michael, what is going on in today's market with electronification, and how is it affecting access to liquidity?
Well, thank you very much for having me. We're seeing a couple of things, and we monitor this data at our firm. One of the things that we've noticed is that there's been a decrease in the number of trades on trades that are what's traditionally considered as block size trades.
Mm-hmm.
So whereas, on the smaller trades, size between 100,000 to 1 million or so, there's been a substantial increase. Also, in addition to that, we've seen just in general volume pick up in those sectors.
What's happening to the larger block trades or the larger notional value trades? Are we seeing a decrease in those numbers as well?
Yeah, we're starting to see a decrease in some of those numbers. Traditionally, those trades have been done with the RFQ process, which has been very widely adopted by the institutional investor base. And those quotes, the orders in the RFQ market in the non-fillable quotes have increased a little bit over the course of the last couple of years. Now it's somewhere around 1/3 of those orders don't get filled.
Really?
Yeah.
Is that what's driving folks into the electronification of the electronic markets, more of a sort of a modern day equivalent of the SEF or the exchange trade market for bonds?
Oh, well, absolutely, Alex. I mean, what happens as a result of that is folks start looking at ways that they can complement their liquidity. Mm-hmm. There's been, over the past couple of years, there's been a real sort of emergence of this lit market where it's there are thousands of QSIPs, two-sided live markets, auto-executable. So if a client likes the quote, he can just simply engage with it and trade. We've seen more of a emergence with clients looking at that pool of liquidity as a way to supplement their current workflow.
How hard is it to get involved in the sort of the lit markets? Is there a lot of investment that folks need to do? Is it available to both large and small sort of dealers, or is it more only for the larger players in the marketplace?
I certainly would say it's available to all participants. There is, of course, an investment process that folks have to be willing to make, because with larger institutional clients, when they invest money, it tends to be a very scalable type of operation.
Exactly.
And so in order to streamline it and to create the uttermost amount of efficiency of interacting with multiple sources of liquidity, there are some investments that have to be made.
If we see a further sort of electronification of the marketplace, are we going to continue to see the notional value of the product sort of diminish and the number of trades increase like we see in other marketplaces? Or are we going to see sort of a leveling of that process and sort of a reversion back to sort of the mean?
Well, I think that's a very good question. I think, from looking at that perspective, I would tend to sort of look at history and look at the other markets. I mean, obviously, fixed income is a very different animal as compared to equities or foreign exchange or even options. But generally speaking, the more efficiency that is brought from electronic trading enables users to sort of form their own liquidity by piecing together small lots as opposed to having to do large round lot orders. So we personally believe that is very much likely a trend that will continue.
What's the biggest barrier to entry into sort of the electronic markets right now for this type of product?
Well, I think the biggest barrier to entry is for folks to get an understanding of sort of the current market structure and to analyze it, and of course to make proper investments and build the infrastructure that enables such participants to enter the market. Clearly, changing the way some of these larger institutions who streamline the process already is potentially a lot of work, and that's probably some of the barriers. But the rewards there are probably going to be sort of there for years to come.
Pretty substantial. So electronification is here to stay. Michael, thank you very much for joining us here at TabbFORUM today. We appreciate your insight.
Thanks for having me.